Over the last 2 months, meme stocks have been on the rise, but is that about to change now? According to Michael Bloomberg and several other analysts, the answer is yes. In this video, we're going to dive deep into their analysis and determine whether they're correct or not, and we'll also go over some other AMC stock news. An article from the Bloomberg magazine released yesterday highlights a few reasons why AMC and other meme stocks might be on the decline now. An index tracking the 37 most popular meme stocks has been flatlined over the last 2 months. This means that the meme stock crowd has been stagnant for 2 months, which is apparently a bearish sign for many analysts and investors. The article says, talk to Wall Street investors and they'll tell you that the flatlining is the beginning of what will be an inexorable move downwards in these stocks. This article does not name any specific Wall Street investors, so it does lack some credibility there, but we'll keep reading. The next point that this article makes is that as the economy starts to get moving again and businesses start to open back up, many people will start being occupied. Retail investors, especially those who trade meme stocks, will start to go into offices and restaurants and they'll embark upon other trips. Matt Maley said, people are going to be doing other things. He said there will be a big reckoning at some point, and there's no question in my mind. Now, this is a pretty red flag. Matt Maley is a credible guy. He's the author of Benzinga Stock Picks, the chief market strategist at Miller Tabak & Co., and he has his own reporting called the Maley Report newsletter. And he's not one to try to sway the markets for his own benefit. Him suggesting that we're at the start of a big reckoning raises some concern. Some evidence to back the idea that people are going to be traveling more is shown through recent Google trends. The article theorizes that vaccinated Americans are planning long-awaited vacations, which is shown through increased Google searches for flights. This is true. Google Trends show that people are beginning to search more for flights on Google now than during the middle of the pandemic. Google Trends also shows that searches for stock trading and investing are declining. The article suggests that people are looking to spend their money on things like sporting events, vacations, visiting family and friends now, rather than investing it in the stock market like people did in the midst of the pandemic. People would also rather spend their money on clothes before going back out into the public. For AMC specifically, none of the analysts rate it at a buy, and they expect it to lose 63%. But as usual, analysts will be biased, which does make them not that credible. Now, regarding the negative news for AMC, Adam Aron, the CEO, is asking shareholders to approve an additional 5 million shares to be added. If this gets approved, it would be terrible for us retail short-term investors. For long-term investors, this could be considered a good thing, but for short-term investors, it's terrible. The reason for this is that we're hoping to have another short squeeze with AMC. If AMC dilutes itself with another 5 million shares, the short interest will decrease drastically due to the extra shares being added, and it'll become virtually impossible to squeeze. If shares get diluted and more retail investors are beginning to shy away from the stock market, there's a very, very high probability that meme stocks will come to an end. Personally, I don't invest in meme stocks because I like to be trading something which lines up more with its true valuation. Let me know if you're continuing to buy GameStop or AMC in the comments below. Like and subscribe and let me know what stock you want me to cover next. Peace.